The fundamental forecast for the US dollar is bullish. There's a rebound in equities and the dollar through the end of the week that reflects confidence in the US debt ceiling accord. For the dollar, a tempered default threat is bullish, but the real impact comes from risk trends and possibly NFPs. Whether a swollen risk rebound from default fear, the greenback can recover. So one of the handicaps in the monthly NFPs as the market mover is that there is typically released on a Friday that prevents the market from building ahead of steam on risk or rate expectations, so speculators avoid holding momentum-based positions over the weekend. That said, if the US government is reopened, the job numbers could be released as early as Tuesday, and there are larger consequences to this data than a simple short-term volatility burst. Recently, the Fed officials have spoken about how close the September decision to delay the taper was. Some have remarked that the fiscal standoff and absence of data could further postpone the inevitable moderation of the stimulus program. However, if the crisis is averted and jobs data end up impressing, it could seriously change expectations, exactly when the market is impressionable and sensitive to changes in the risk backdrop. The fundamental forecast for the euro is neutral. There's a slowing growth momentum in Europe, which is hurting the European currencies. Retail forex traders remain net short the euro-US dollar. The European Central Bank policy will let the euro rally if data improves. The euro had a mixed week of US fiscal headlines where the main focus of price action across asset classes around the globe. The commodity currencies benefited most as the veiled threat of the US default was seemingly lifted into the weekend. And the euro lost about 0.45%, I believe it was. And Australian and New Zealand dollars also lost respectively. The euro-US dollar closed lower than 10% low, recovering some on Friday, suggesting that the easing of the US fiscal tensions could ultimately play into the euro's favor. The fundamental forecast, on the other hand, for the Canadian dollar was as well neutral. There's a US-Canadian pullback that may yield long entry where the US new home sales rose to 417K. The Canadian dollar gains after March CPI slows down. The Canadian dollar strengthened this week against its US counterpart on an improved economic outlook in the UK and the US. Britain managed to avoid a triple-dip recession, recording a positive growth rate in the first quarter. Meanwhile, the U.S. jobless claims report came out better than expected as the first quarter GDP grew at a moderate rate, further helping to push the loonie higher. Also, crude oil, Canada's biggest export, rebounded and it hit its highest level in 2 weeks. Looking forward, we may see that the Canadian dollar consolidate and build a short-term base before making another major move to the upside. In addition, the IMF's latest report suggested that Canada should refrain from tightening its monetary policy until its economy improves. In order to get a clue on the timing of interest rate move, investors will want to keep a close eye on 3 factors: economic growth, personal debt, and aspects of the housing market. With rates currently as low as they are, the Canadian dollar has less upward support. The fundamental forecast of the Japanese yen is also neutral. There's a speculation sentiment puts yen at a make or break inflection point. The yen approaching key support versus the US dollar after 4th weekly gain. Get real-time feedback on your yen trades with Daily Fox on demand, which is what I use. Japan's economic policy mix looks to be locked in place for now. On the fiscal side of the equation, the Prime Minister Shinzo Abe delivered a widely expected sales tax increase, pushing the rate from 5 to 8% as of next April. This was coupled with $5 trillion yen stimulus plan allegedly to be financed without new bond issuance, designed to offset the tax hike's negative implications for overall economic growth. A proposed cut of the corporate tax rate has been tabled for the time being. While Abe talked up about the urgency of studying such as a move as soon as possible, his very own finance minister, Taro Aso, hinted otherwise, stressing any reduction would be at best a medium to long-term prospect. Details of the stimulus plan due in December amount to the next major inflection point. The fundamental forecast for the British pound is also neutral. BOE maintains rates, the GBP holds at key levels ahead of the US Open. The GBP USD focuses on selling above 1.6 for real-time updates and potential trade setups on the GBP USD. Sign up for the analyst on demand. The British pound, however, has struggled to maintain the bullish trend dating back to July, even as the Bank of England retained its current policy at the October meeting, but the sterling may trade on a firmer footing next week should be fundamental to the developments coming out of the UK, which is encouraging the central bank to implement its exit strategy ahead of schedule. It does seem as though there was another unanimous vote within the Monetary Policy Committee, as the central bank refrained from releasing a policy statement, and the Bank of England minutes due out on October 23 may be more hawkish this time around the UK recovery. The fundamental forecast for gold, bearish, euro, gold, opening ranges in focus loan AUD scalp, set up pending gold down for third day as 10 by 12 rally is almost completely rephrased. Sign up for an analyst on demand so that you can actually get this information from us. The gold prices plummeted 3.21% this week, with the precious metal trading at $1268,000 ahead of a New York close on Friday. The losses come on the back of a surge in volatility this week in broader risk assets, as the stalemate regarding the debt ceiling and the ongoing government shutdown in Washington continues to dominate the media headlines. While most financial publications will attribute recent price action as exclusively in response to the ongoing drama on Capitol Hill, price action in gold has been rather telling, with both the monthly and weekly opening ranges proving bearish for the yellow metal. The fundamentals for the Australian dollar, surprise, bullish. The Australian dollar recovery faces important tests amid key Chinese economic data. There is also a breakout of risk aversion that still is a threat as the US debt ceiling deal remains elusive. So what is the speculation sentiment that is balanced now is that it favors the Aussie dollar's gains. We've argued in favor of a significant Australian dollar recovery since early August. We thought an improvement in Chinese news flow will help arrest the slide in economic growth expectations for the East Asian giant, boosting the outlook for Australia's mining sector, exports, and prompting a positive shift in the RBA policy bet. The case for an upside scenario seemed all the more compelling against a backdrop of highly overextended speculation, which is net short positioning, and we proceeded to enter long the AUD-USD after an attractive technical setup presented itself. New Zealand dollar, neutral. New Zealand dollar flat as service sector remains expansionary. The Kiwi surges as New Zealand first quarter CPI rises less than expected. Risk on cents bounced the Kiwi higher on the back of the yen. The New Zealand dollar ended the week nearly 2.0% lower, a dramatic turnaround from previous weeks. After disappointing Chinese data show lower than expected growth in New Zealand's biggest business partner, investors were forced to reconsider their positions in the Kiwi. In addition, weak US data and a collapse in the prices of precious metals dragged down risk-linked currencies like the New Zealand dollar. On the other hand, New Zealand's first quarter consumer price index met economists' forecasts and has grown at a steady pace. Looking forward, given this positive and negative momentum, we may see the Kiwi rebound within range. Thank you.